Okay, folks, welcome back. Today we're gonna do a quick video on gold. Um, One of my subscribers actually requested for me to do a video on gold and just some basics on Goldbach and how to implement it and some different strategies and different ways to kind of use it consistently to hit your targets and aligning it with your buyers for the day. So that's what I'm gonna do in this video. Great. So to jump right in, this is gold. Um, I seen this really good example. I don't really typically trade gold, but just at a quick glance, I seen this example and I figured I would kind of show him exactly how I would have taken this trade during a time he would have probably taken this trade, right? This is Thursday, New York Open, and what do I see immediately? Okay, we're into New York Open. We're about 8:30ish when this move occurs. And what do we see? The first few things that I want you to focus on is where is the liquidity? Where is the liquidity? This is where our interest lies, right? Gold has been in an uptrend and it looks like it started to slow down around entering this new range, right? Right, because these are two ranges stacked on the top of each other. We're on the 81 PO3. Both of these ranges are stacked on top of each other. We just finished this range. We entered a new one, and now we're consolidating. And before we consolidate, we have to clear liquidity and then continue on to the new range, right? Clearing the liquidity is setting you up to start the new range that you're going to be trading into. So I basically caught it. I found an exact time and area that this was happening in, right? Just at a quick glance. I wasn't searching for this. It just, I just happened to find it, right? So what is happening in this section of price action, right? New York Open, we see that price just entered this range and we're currently in a downtrend. So what do we see? We see price at the high, right? Price is in the 17 partition, the 17 level partition, and price failed to sweep above the 50% of these two partitions, the 17 and the 29, right? That's the first indication that price is looking for a downward move towards some kind of downward liquidity. And we have London and Asian liquidity resting right below this, right? So we see price fail to get above the 50% to enter into the new level, the new 29 level partition. It failed. So now we're looking for lower prices, possibly some liquidity that has been generated for us to sweep before we continue to the main trend, which is going upwards, right? So how could you have gotten in this trade, right? We have the information about what's happening in price. Price failed to get above the 50% of these two levels, right? Price displaces downwards into a new partition, right? This 11 level right here. It displaced into that level. So these are all indications that you should be getting ready to decide on whether how you're going to get into this trade. How would I have gotten into this trade? If I would have seen this level of being failed, I would have probably just taken this trade, just straight up taken this trade on the turtle soup, right? As soon as I seen this, it failed here, didn't reach the 50%, and then they came back and took this sweep. This would have been my entry to go lower, right? To the downside, targeting those Asian and London lows, right? And that's your 9 to 1. And this happens in minutes, right? In about 30 minutes, this is a trade you could have taken, right? But let's say Eli, I'm not sure. Like, I don't want to take a turtle soup. You know, it's kind of nerve wracking to not be sure, right? Over time, you'll gain the confidence to be able to just take the trade at a certain level, knowing that, you know, it's respecting your levels that you have outlined previously, right? But if you wanted to wait for a retest, you've seen the displacement pushing away from this 50% level, right? It didn't even tap the 50%, but you've seen the displacement. What do we have here? We have an order block, right? You could have taken the entry in of the order block, right? That would have been your move targeting Asia and London highs, Asian and London lows, right? That could have been his second entry, right? Maybe you don't like order blocks. Maybe you like fair value gaps. Here's a fair value gap for you, right? Another entry. For fair value gaps, I like to use the 50% to get filled, stops above the high, target your Asian London liquidity. That could have been another entry. Another fair value gap was formed right here. Could have been another entry, but mine would not have gotten filled because I like to see the 50% rejected, right? But you seeing this that it didn't even come back to the 50%, that's a clear indication that we're weak, that we want to continue lower, right? But for this section of price, you have to be cautious because we just swept uh, London liquidity and Asian liquidity, and our main trend is bullish, right? So this is how nimble that you have to be able to um, navigate the markets, because although you're planning one leg of the market, you got to understand that another leg is being formed and is going to be playing out. So you got to make sure that you realize that, oh, we swept London and Asian liquidity. Okay, we might be gearing up for a different leg of the move here. And that's, as you can see, that's what's happening, right? Price pushes up, displaces, and it's starting to respect what? Bullish PD arrays, right? It's starting to respect bullish PD array. We have one more drive lower, testing uh, this level down here. This is our starting range level, if I'm not mistaken. This is the 0% of the range. This is where it starts, and then it starts on its algorithm back up to the upward cycle, right? So this is just um, one move that you could have taken during London. This was last week, Thursday. Like I said, I don't trade gold, but just at a quick glance, this is a move that I would have definitely taken, right? It failed to get above the 50%, was an indication to me that we're looking for lower prices before our continuation back to the upside. We have a rejects turtle soup here, sweeping out liquidity above this high that was made. This happened 9:15, right? And then displacement into a partition, the partition lower, a retest of the order block, right? Retest of an order block, displaces further down into our targeted liquidity, which is Asian and London lows, right? And then here you wait to see what price is going to do, if it's going to continue lower or if it's going to begin its overall trend back upwards into higher prices for gold. Okay, so that's a trade that I would have taken. It's very simple. I don't like to overcomplicate my trading. I like the levels and combining it with time. Here, this is a trading model that strictly relies only on the levels, right? Having the PO3 levels plotted out onto your charts that you can use as basic support and resistance, and a lot using my fib tool to see exactly what part of the partition between each level is being used, right? I like to use the 53 to the 40, 59 to the 41. I like that areas because price typically instantly rejects these areas. They make great points for turtle soups, reversal points, getting those entries where it taps it and it instantly goes into the opposite direction, right? That's exactly what we've seen here. It taps the 41, sweeps it, right? And then instantly rejects it and goes lower, right? Those are my favorite kind of setups. And you can do this with any instrument, any asset you can do this with, right? You've seen I've done it multiple times with um, Nasdaq. I'm actually going to be experimenting pretty soon with different um, assets like agriculture, soybean, lean hog, and other assets like that, right? Let me show you a few trades that I've taken in the past week. Again, I'm in here with Richard. He's one of the traders in our Discord, Simo, and they've been having some excellent trades. Richard took this trade, expecting lower prices. I'm pretty sure that uh, came down a little bit. This is a trade that I took, exactly how he's explaining. When price comes up into these key areas, right? The 59, 71, and price instantly rejects and goes lower, right? Um, Simo is interest. He has a higher interest in taking um, time-based GB trades. Let me see. I have some entries in here. This entry is the same logic, right? I'm waiting for a certain range to be tapped into my 53 to 59 or the 50. As soon as it taps, I got a top tick to the move upwards, right? And these are just trades that we just take over and over and over and over and over again, right? This is a trade that I took, same thing, right? It's the 50% right above. I have the leveled at the 53, rejects, and it goes lower, right? And these are the trades that we just take over and over and over again based on the logic, right? So, with that being said, I'm going to end the video here, and happy trading, folks.